And let's go ahead and get started. So just another sound check that you can hear me and see my screen. Just a couple people type in yes, and I'll know we're good shape. Thank you. So just a couple of comments before we get started. Let me start the backup recording too. Record to the cloud. Awesome. All right. So for those who don't know me, my name is Jeff Scott, and in a little bit, I'll introduce you to Dr. Keith Wade. And we're going to talk today, I'm going to talk about the market. And then the reason why I brought Dr. Wade on is many of you know I'm a big fan of seasonality. In my daring days, I would tell you exactly what trade to take on Netflix, and I'd get some wonderful emails back on like the 22nd or 23rd of January, the day after whatever the January holiday is, President's Day, I think. And there are a number of trades throughout the year where you do have an edge, a significant edge if you trade seasonality. Most of the seasonality programs on the market are going through changes. The old standby, used to be Sonny Decker's program, was sold to one of the users, made web-based. Magenta Trader was sold to a new company, and the seasonality traders run by a guy in the Philippines. They're all excellent programs in their own merit. I own all of these. But one of the challenges I always had is I work in Thinkorswim and I work in TradeStation. I don't do my work in a Java-based third-party program or in a web browser. And I've always been looking for a program that I could put into Thinkorswim that would be a one-time fee. I didn't have to pay for data on a monthly basis. And more importantly, I wanted to take my own charts and be able to paint on my own charts the future seasonality. So I'm going to show you a little bit of that today. I'm going to talk a few comments about the market, and then I'll turn it over to Dr. Wade. So I think we're all in the room, and I set it so people can come in by themselves. So I'll do my usual review on Sunday. When I set this up, I didn't realize that it was a Friday holiday. So the week is done, and I got to figure out if Microsoft closed at more than 155, or 165 rather. If not, I just got called a bunch of shares because I had a spread on it. It was real close at the end. But anyways, this is my market review and the product intro. As always, this is for educational purposes only. If I talk about individual stocks or trades, it's in the spirit of education only. I'm a doctor, not a broker. I am independent. Now, I introduce a couple of people from time to time to folks that follow me, and I don't take any fee, and that sometimes allows the person coming on to sell at a lower price than they normally sell. I don't want to get a piece of anything that you sell. In fact, I paid more for these tools than you will if you buy them. And trading involves risk, and you alone are solely responsible for any investment decisions you make. Folks know who I work with. I don't need to spend much time, but my basic trading started with CanSlim, with O'Neill, improved by Morales and Catcher. This is really my hero, Ian Woodward, may he rest in peace, who really taught me how to use HGSI to make money. George Lee recently passed away, a great guy, trader. This is John Person, author, mentor, software developer, and also a close friend. Sagar, down here, has actually joined us today. Welcome all the way from Thailand, where it's probably the middle of the night. And Van Tharp, who's a position size and money management guru. If you don't know HGSI, this is the website. I'm going to use it for about a half hour, then I'm going to turn it over to Dr. Wade. But HGSI is the base tool that I use in my analysis. I really like the Q tools and both in the freestanding ones as well as ones in TradeStation and Metastock. I recently had John Person's indicators added to HGSI. It's an extra add-on. It requires an active subscription, and there's an introductory price. I think it's $7.27. This is the link if you're interested. Again, I don't take a penny. Stock patterns are cyclical. You see this every week when I do it. And the reason why you see it, it's actually pretty important because I think you have to know where you are on this while you trade. And there's intermediate, there's long-term, there's short-term cycles, and every stock, every index, and I don't care what time frame, goes through the same pattern over and over again. Clearly, last week we were coming down, or 3 weeks ago we were coming down hard. We've had a couple of weeks of plus minus. This was a crazy rip to the upside week, but it doesn't mean that this is over. Based upon where we are on this cycle, and again, is it a long-term cycle, short-term cycle, it impacts on how I decide to trade. And I got out of most of my bearish positions. And this week, this was probably the best week I've seen in a long time. And I don't know based upon how it finished if it's still true, but I know that the S&P was up the greatest today that it's been this week since 2008. Just a couple comments. Don't fight the trend. You've heard that before. But what I want to really focus on is in an uptrend, does it really matter if you hold it long enough and the uptrend lasts long enough where you bought on this curve? And, the answer is no, because in an uptrend, it's very forgiving. Trying to short in an uptrend, not so forgiving. You have a very short duration of a move. We're in a downtrend now. Clearly, we're in a downtrend. Whether we reverse that or not, I think the jury's still out. But I just want to call out that these retracements in a downtrend, the biggest moves in the market history, up moves, have occurred during a bear market rally. So as much as we might want to be very excited that that this week was such a great week, until proven otherwise, we're still in a bear market rally. And just a couple more slides, and then I'm going to look at HGSI. Oops, I forgot to update it, so let me do that real quick. To do an intraday or end-of-day update before the final data is in, come on, go back up. Thank you. Let me bring HGSI back. I have to have my intraday set at enable. My intraday options are set at Thinkorswim. I have to have Thinkorswim open, which I do. And then I'm going to do a full update, which takes about 6 minutes. And I'm not going to update my Metastock files. That's not necessary right now. Or I'm going to hit update and let it run. This slide here is worth a lot of money because we're in a dead cat bounce. Now, it's possible that this cat's going to grow wings and in the next 3 weeks take out the prior highs. Now, I don't think that will happen, but I can't say it won't. And maybe the 4 most dangerous words in trading, this time it's different, might be true. And maybe it's different because this is a government-induced recession and unemployment issue and shutdown of the economy, and maybe because of all the Fed stimulus and the easing that we've seen and all the programs to help the worker, that maybe we will go back to new highs very quickly. That's just not the normal thing. This is from Nautilus Research, 3 markets just to show you. The Great Recession in 1929, and this is 1987. And, when this slide was put together, we had dropped 34%. That's still where the drop has been on the S&P. We've had probably a 30% rally. I haven't done the math for adding this week, but we were at about 20%, and then you have to add 11, so we have to be about 30% up off that bottom. But if you look back at 1929, 1987, you saw ferocious 18% here, 15% here, rallies. And then what did the market end up doing? The market fell to lower lows. So in the case of 87, it wasn't that much lower. It's still 13%. Sort of got back to the original low. But you really dropped hard in 29. So even though this market has been super exciting, I'm cautious because dead cat bounces are the norm and not the unusual. So I'm going to go through a very quick look at a top-down view of the market, show how I use the person add-on to find stocks, and then I'm going to turn it over to Dr. Keith. I sit, the crazy thing about this COVID-19, and I'm not the only one I'm sure that's experiencing this, is I haven't spent this much time at home in my life. I live on conference calls. I've never spent so much time with my wife. Fortunately, we still like each other. My dog is probably ready for me to go back to work. But it's been interesting. So I've been spending time. I always have this chart on. This is daily futures, and I just want to show you that we've retraced to about the 50%, whether I look at the S&P futures, a little bit more at the close today on the NASDAQ futures, just below it on the Dow futures. And despite a rousing, crazy day, I think we're at the 38.2% only on the Russell futures. And so right now we're a retracement in a downtrend. We came from here, we dropped to here. Now, is this going to be a V bottom and we go back to the top? We may. But on the other hand, I still have to be concerned that we're going to go and retest the lows. So I've kept a lot of cash on the side. I put about 25% of my money in the market here, which was at the 38% retracement. I got suckered in the next day and then it sold off. I put another 25% back in the market on Monday, but I still have a fair amount of cash that I'm holding. And I'm not afraid to sell everything and go short, nor to take some contra ETFs, which will kill you in a bull market because they're probably going to go down, but you buy them as insurance. I bet my friend Sager has seen some of these indicators before. Much of this are the Q tools that I use. And, it's funny. I ended up making a few pennies today, but at about 3:30, I was down a lot. And I'm heavily tied to the NASDAQ. And this is the NASDAQ here. So we got a nice little wedge here. And it's amazing sometimes how these lines, which are automatically written in Cigar's program, the Q for TradeStation, how they're self-fulfilling prophecies. And these little crosses and dots all have meaning, and they indicate often a likely trend reversal. So I sit here during the day, and I do go in and out sometimes based upon my signals. But until proven otherwise, this is a bear cat bounce. As much as I'd like to say we're going to go to new highs right away, we may. Nothing would make me happier than if we go to new highs. I also, as people know from my Sunday videos, do a lot of things with TradeStation radar screens. And a note to Keith, if you can do your 20, 40, 60 in radar screen, that would be outstanding. We'll look at Market Watch at some point. All right, go away. All right, cancel. Let me just close this desktop. No. All right, no. Okay, and no. All right. Now, see, I delayed long enough for HGSI to do a complete update. I don't know if, Dr. Keith, you've ever seen HGSI or seen me use it. On my computer, and this is if you look at it and you have any programming history, it feels like an old program from an architecture, but I just did an entire market update in about 6 minutes, and that includes all the technical and fundamental data is now put into to me, it's a giant spreadsheet with pivot tables. But I'm able to, for example, look at Major Markets Plus, which is a list of major markets. Hit the warehouse view, and then I use something called a top-down view to rank them. And it shows me a lot of cool things. So this is at market close, but that's not to say there won't be updates later in the day. The first thing I look at here is the things that did poorly today, which are good for your stocks. It's the dollar's down, that's good for stocks. Volatility was down. Treasury Pro shares, gas, commodities. What's not good for a lot of my positions and why I thought I was going to lose money today was, interestingly, the SOX was down. If you look at the week, you can see small caps were up 15%, mid caps up 15%, utilities were up 13%, NYSE was up 10%, gold miners, which I've talked about on several recent videos about how they were lagging. Well, they weren't lagging this week. They were up 15.6%, more than gold, which was up 4%. Biotech was up. So you get a sense of 1 in 5 days. And what this view does is it combines a filter and a ranking module, and it's telling me that over the last 5 days, the strongest groups were small caps, mid caps, no shocker. And then just to look at it in HGSI, because I like to look at it in HGSI. And I haven't done this in HGSI. I thought I did it last week on Sunday. I did do it last week. And you could see we're right up here at the 50% retracement. For those that know HGSI, will recognize this green bar. It's called a eureka. And within our world, it's a mathematical computation of the William O'Neill follow-through day. It's a little bit different, and I'll show you what goes into a eureka. But a eureka looks at advanced decline ratio, advanced decline volume, and the ARMS index. And when this fires, that's a very bullish signal that the market is strong. It's calculated on the NYSE, so on any chart where you see it, it's not calculated on the underlying, it's on the NYSE. And you know, we've dropped quite a bit. We're not quite halfway, but we're approaching halfway back. When are we going to fail? And you know, we'll see next week. Nothing would make me happier to go back up to 3420 and start setting new highs. But if you look at markets that have fallen 30% in the past, 30, 40%, they don't recover in 20 days. They recover in 2 years. So this seems a little bit quick from my perspective. Since I live mostly in the NASDAQ on my stocks, it's interesting how close the NASDAQ has gotten to the 200. And if you're a candlestick person and you see that we have a doji forming here on the NASDAQ, that might be bothersome because the doji is an indecision day. And are we setting up an island reversal gap there down on Monday? That would fit my premise that we probably have some more downside to go. Who knows? It also could be, as Steve Bigelow likes to talks about it. He'll say it's market indecision. If it opens up, it's trading higher. If it opens down, the market's going down. So we'll see on Monday. And for those that follow John Person, NASDAQ's an important part in his high close doji, low close doji analysis. So on my weekend review, I'll go through the rest of the markets. The Russell really today was on fire. Look at the gap up on the Russell, and the Russell closed near the highs. I haven't looked enough at the others, but we just saw the NASDAQ had a doji. So this is different. And then this down here in blue is called the kahuna. And, you know, we make these words up as we go, at least Ian did. And it just exemplifies a large percent B move. So the combination of a kahuna and a eureka on the general markets, that's a very bullish sign. Now, once I get a decision on what I'm going to do in the market, those that have watched me before know I like to go and look at industries. And HGSI has 176. And let's see if this is going to work, or I've got to go to a different thing. Now, we have 110 of the industry groups on a 2-day force. So force index is an Alexander Elder tool. It's today's price minus yesterday's price times volume plotted. And to me, that's kind of like momentum, price and volume. So I rank things on a 2-day force, and you can get an idea of how strong this week was when you look at 110 groups to the upside. And on the 2-day down, I've got one group, which was integrated oils, which over 5 days wasn't so bad. And for a more intermediate term, my 5-day up is 111. So this is a major dramatic change from 2 weeks ago. So if you want to say I'm full of shit, which I am, and that the market's going straight to the top, you've got some intermediate term momentum that would back you up. Now, everybody who follows me knows that I have more tools than anybody else. And during the day, this is sitting on my desktop. And this is one of Sagar's tools. This is Q Edge. And he's got a whole series of tools for TradeStation, Metastock, and then freestanding. The downside is you need Metastock on the freestanding piece. But you can see over a 5-day window with 5 days being in brown, everything was up, whether it was a 1-day, 2-day, or 5-day when I look at the sector. So clearly a very strong week. And if I look down here, although this was a strong week, and in green, last week was a strong week, if you go out and look at a month, you can see, yeah, energy was up 25% this week, but it's still down 30% over the past month. What I really like about these tools is that I can break out and rank the sectors during the day. I can even break them out and look at them by percentage moves. Obviously, today was a very strong day, and you could see real estate. And real estate, which if you go back a month ago, was down 28% over the last month, showed some strength today, up 5.8%. So I get an idea of what's working. I can even go during the day, and I could rank various different ways. Sometimes I just like to go in here and look at percentage basis and say, wow, housewares and specialties, to me, that's probably a boring group. That really had a big move today. And if I do this correctly, I can just touch this, and it's going to show me what the stocks are. And by the way that Sagar's stuff works, Tupperware is at a good valuation. It might be something I would look at. So I use these tools during the day to gauge the market. When I do my weekend review, I'm not going to do it now in the essence of time because you really want to hear Dr. Wade, not me. I basically, the power of HTSI and the way it's such an easy program to use compared to Metastock, in my opinion, is I right-click on REITs and I bring up the various REITs ranked by that same 2-day force. And I can just double-click on American Tower. This is one I've liked for a long time. It sold off hard. This is a 5G play. They're not waiting for house rent that people are not paying, and apparently Staples decided not to pay their rent. It has huge growth rates, pays a small dividend. Earnings are out May 1st. But it basically ranks using that same tool. Simon, I can't buy department stores. It's kind of interesting that it bounced. Prologis does factories, not factories, does warehouses. Welltower does healthcare. But you can go down and you can rank these, and I can go through the entire market. So when I do my weekend review, I go through the top 10 groups on the upside, and I look a little bit at the groups to the downside. The other thing that I like to do, and that would be considered top-down, I look at the markets, I look at the industry groups, and then I try and find the best stocks in the industry group. And that's what I put on a buy list to buy. And I'm going to, in about 10 minutes when I turn it over, 5 minutes, I'm going to bring you right up to where I use Dr. Keith's stuff so you could see why I like it. In a top-down analysis, it's industry, it's market, industry, and then stock. In a bottoms-up is a different analysis. A bottoms-up says, I don't care what industry group you're in. I want to find the best stocks in the market right now. So I'm just going to go here. If I put on a price and volume filter, and actually I'm going to do it over here. I think I'm going to do it over here. Let's see if I have it here. I don't like to buy cheap stocks that have no volume. So I'm just going to look at all securities, $2 and 250,000. There's 2,801 in our database, which means there's a lot of things that are ETFs, because I should have blocked most ETFs. There's a lot of things that have low volume. I won't buy low volume. I like to buy options if they have low volume. They highly likely do not have low, they probably don't have options. So I'm just ranking this by the scorecard combo. And if I click on the padlock here, it'll tell me, edit, what I'm ranking it for. But it locates top stocks to trade based on both technical and fundamental factors. So here I'm taking, they have strong earnings growth and revenue growth, strong relative strength, group rank, accumulation, ROE, etc. Now, I could just put that on and say, let's go down this list. And if you look at this list, you'll see a lot of mineral plays. Chipotle had a big week, 22% week. I looked at it this weekend. It was one of those, if the market goes down, I'd short it. And the market obviously did not go down. I want to fine tune this. I want to take this list, and I've put together a number of ways of looking at this list. I might want to find stocks near free parking. In HGSI, free parking is the 50-day moving average. So by definition, any stock here has got to be within 2% of the 50-day moving average. Well, this is funny. Bristol Myers Squibb closed on the 50-day moving average. And now it's in an uptrend because it's above the 200-day moving average. And now I can come down here and say, show me all the stocks in the list that are 2% of free parking in a squeeze that had a momentum indicator. And so I might come down here and look at stocks that, I'm looking at this and saying it didn't update. Well, it's got the person buy signal, so it's still in a person buy signal. So each of these stocks are in an uptrend, or at least they're above the 200-day moving average. They're near the 50-day moving average. This one had a mobile breakout from a squeeze, has a person buy signal. And I could go through and look at them. This one had, and you know what, I think this is still using yesterday's signals. Mobile breakout from a squeeze, a kahuna, a John Person signal. So what I did is I took, what is this, ARVN, a small biotech. Small by market cap, it is 1.8 billion. So I took that list of 2,800 stocks, and using a filter, I was able to bring it down to a list that makes sense to me. Another thing I like to do is I like to find stocks near the 20-day moving average and do the same thing. By having the yellow here, I know it's in a squeeze. Can't see crap because it's not been doing much. I wonder if it was a buyout, but it had a mobile breakout squeeze and a kahuna, which is what I basically built the filter to show me. So I mentioned the John Person indicator, and just to show what I do there, this was a strong week, so I know there's a lot of new buys. So there's 136 stocks that, if did things correctly on my update, should have had a new person buy signal today, which it did. Now I can take that and I could say I want to find a buy signal near weekly support. I won't buy an acquisition company. This looks at relative strength improving, 121. His piece de resistance is a trilogy buy. These are 15 stocks. They have to be in a daily buy, weekly buy, and just took out what's called his last conditional change. And you could see all of them are green here with big moves over 1 day and 5 day. I find a lot of good stocks in here as I look. And this one's not gone too far. It's one of these lifestyle stocks, leisure products that has been beaten up because no one's going out and playing. But at some point, they may move if they don't go bankrupt. And this shows me it's under a lot of demand. So I go through these various scans that I've shown you. How about an HCD? HCD means that it's a weekly HCD. It means that I closed within 3 bars above the high of a doji. And it only counts if the market was in a downtrend, which it was. This is a very bullish signal in my use. And then it requires a John Person buy signal today. So I would build up a list of stocks. And then what I do, and I usually talk about radar screen, but in reality, it's not just, and I got to look and see if I got stuck with the Microsoft. Ha! How perfect can it be? I bought 155 calls, sold 165, and it closed on 165. Perfect. I didn't want to buy it anyways. Awesome. For my, well, I'm going to go back to, for Market Watch, and this week when I did my review, I was mixed, and I'll be mixed on this week's review because I am concerned that the market's going to turn. And the last thing that I want to do is I want to come off so bullish that you go and bet the farm and then you get mad at me because the market takes a dump. But what I do is I build up a buy watch. And this was my buy watch from this weekend, this past weekend. This is week to date. And you could see there were some real losers here, but the real losers were contra ETFs, FAZ, contra finance, TZA, contra small stocks, short the Dow, ultra short the S&P. And the reason why I had these, I wanted these sitting in my watch list so that I would know whether I needed to go short if these started breaking out. And on the long side, I had some really good stocks. Easterly Government Properties, I fear that's a REIT that no one's going to not pay their, it's the U.S. government, was up 16%. Nova Gold was up 15%, and so on and so forth. I did buy Diamondback. Now, on this Market Watch, over here, I'm just going to point out a couple of things. And Dr. K will talk to you about these more so than I will. The Laguerre RSI, he's got a modification of that and then a scanner, and it's finding me stocks that might be in the right position to go long and short or short. And then this is a stochastic market watch and giving me a clue as to direction. He'll talk about that. And then over here, if there is a 1, whether it's green or it's red, that 1 tells me that there's at least, I think, 7 or 8 years of seasonality, and it had over an 8% move in either a 20, 40, or 60-day window. So this tells me that Repligen, RGEN, has seasonality now, and that if I look at a 60-day window, its average up is 12.15. Well, that, to me, if I don't have to go scan another program and I can see that, that's pretty exciting. And then I could go look at the chart, and he'll talk much more eloquent about this than I will, so I'm not even going to bother telling you what it is, except to say, I look at this, this is what's telling me seasonality should be, and this is a weekly chart, and then it's basically tacking it on to where we are today. And I'll turn it over in 1 second to Dr. Wade. The RSI is down here, and I'm not a math guy. He's a PhD. I'm the MD. That means all I cared about was getting good grades so I could go to medical school. I didn't care anything else about learning. I just had to get the grades. And I wish I wasn't serious, but I am. Every time this comes out of the green, it's setting up a time that I might want to be looking at to buy a stock. And so I basically like to scan the market, just to show you an example. Who knew? It was sitting right here. I'm going to hit scan, and hopefully it will do this relatively quickly. And it found me a series of stocks where the daily RSI is either long, getting ready to be long, or short. Somehow we got a couple of neutrals in here. And I see a stock right here that's not green. Here's some losers from seasonality. But if I just look at which one do all right, I know American Airlines. So let's just look at AAL. I know from that Laguerre RSI, and I think the window's 3 days, the stocks recently had an up move. And you could see the Laguerre RSI crossed above the green today, And again, this is top down, bottoms up, not top down. Had a person buy signal, and the stock had a big move up today. Well, I guess percentage wise, had a 10% move. It's a $12 stock now. So that's how I put together top down, bottoms up. I look at the market. It's 12 years of seasonal, and it's an 8% move. All right, thanks, Keith. So now I'm going to try and pass the baton to Dr. K, and Dr. K is going to share his screen. I'm going to make you the host. Yes. So hopefully, Dr. K, it's coming to you.
Okay. Dr. Scott, can you hear me okay and see my screen?
I can, but for whatever reason, it's showing on a different screen. But I'm just going to move it down. Why don't we just ask the audience, can they see your screen?
Yeah, can everybody see my main screen? It says Dr. Key Seasonal Tools. Excellent.
All right.
All right, well, again, thank you so much. I'm going to make this fairly short because the tools are fairly simple. I know a lot of you have experience with seasonality, so some of my presentation I'll normally do, I have shortened in my slides, but if you ever have questions, you'll have a contact information at the end of this as well. Again, thank you so much for attending. Look forward to Jeff's got quality folks here, and I'm really impressed with the HESI software that he's been showing me as well. And I think you're going to like what you see here from Thinkorswim perspective. So just real quickly, I just like to disclose as well, I do have my PhD in finance. I am not a registered broker, nor do I ever want to be. But big picture, I think it's always important to take 20 seconds to basically state that, you should never trade with money you can't afford to lose. And that's really what I want to get out of this slide. And again, folks that spend money that they can't mentally, that's very tough to win the markets, because you're getting out, at the bottom, you're just not doing the things that you need to do. So with that, let's get to the good stuff. We're going to talk about seasonal logic, and I'm going to try to cut this to roughly 30 minutes, so you'll have a feel for that. I'm going to explain custom seasonal products that I have for Thinkorswim, and within a week or so, it'll also be for TradeStation. Good. And some special offers. So big picture, I just want 2 slides to talk about seasonality, because first and foremost, I'm an extremeness when it comes to seasonality. Everything that I do is based off of that. So, like Dr. Scott, he's got other factors he uses, and that's great. Everything for me, if it doesn't have a seasonal bias, I'm not taking the trade. And that's the extreme position. But I learned seasonality almost 15 years ago, and have been trying to perfect it ever since. And to me, it's unbelievable that if you know the odds of something, you can make some really good money doing it. So basically what it is, though, it's a predictable change or pattern, right, in a series of events that repeats, in this case, typically year over year, okay? So what does that really mean, and why does it work? Consumers, producers, traders, all become and get predictable. Okay, just like when you wake up in the morning, you brush your teeth, hopefully, right? Well, if you're a Fidelity or a brokerage firm like that, okay, they buy Apple at certain times of the year just because, okay, and they have their own logic for doing it, or Amazon or Facebook or Google, okay, or any of these stocks. Okay, we're focusing on stocks today, right? So because there's that normality on what they do, that's why trades work out year over year over year. And there's some phenomenal odds out there. So I just want to start off by, I'll go over live charts here in a minute, but I just want to give a couple of examples to show you. So, bonds, maybe if you're trading a stock like the TLT, the 20-year, for example. If you go long around the first week in August, and again, I never go long, let me repeat, I never go long just based off of a date, okay? I have specific triggers. But just if you go long around, somewhere around the first week or April, give or take a week, it's been higher in price 33 out of the last 41 years, okay? And to me, that's great. 81% is really good. There's many more trades that are much higher. But if you know that, there's two things you should understand. One, why would you really want to try to short the TLT, for example, in the month of August? Okay, the odds just aren't there. It doesn't mean it wouldn't work, but let's go with what works, right? And then so what I do is I look for longs during that time frame. So here's actually the ZB, which is the futures 30-year bond, okay? But again, just to kind of demonstrate here, this is last year, so we started getting it, and I'm not going to go into a lot of detail on the Laguerre, of the mechanics, okay, but this is my favorite trigger. So once we get to the point during that window, and again, I'll go in 1 to 2 weeks early on a great seasonal play, we got the trigger here, okay? So I already knew there was over an 80% probability that for the month coming up, it was going to go higher, right? So then it was just about getting in and mitigating your risk, okay? And, if you go back and look at your charts year over year for the month of August, bonds go higher, okay? So that was just one example that I wanted to share from a pure chart perspective there. Now, probably my favorite trade from a money-making standpoint is the December to March play on gold, okay? And a lot of you may have heard of it, and you've never maybe back tested that, but let me just kind of show you here. So let me bring up my Thinkorswim. I'll get rid of some of this for now. And I'm just going to type in GLD for now, the gold ETF. And I've got something scrunched over here. I won't show that yet. I just want to keep things simple for now. But basically what we have here is gold, the ETF. And what I'm looking at, I'm going to back up in the chart and I start looking for long plays right around December, okay, for gold. And this is just the daily chart. So I drew a green line here to show you that the trigger on the Laguerre, which is my favorite, most consistent oscillator right here, okay, triggered when it went above the green right here, okay? So if I got in here, okay, obviously you can see what it did over the past, 2 or 3 months, which is very typical in gold. A lot of times I'll get questions on, why is that? And sometimes there's logic, but it's almost like an earnings announcement, right? Earnings may be good and the stock goes down. I mean, a lot of these seasonal moves are just out of habit. A lot of people, retailers and professionals, buy gold going into the new year, okay? So, but the reasons itself, I've done a lot of research on it, and, a lot of these seasonals that are out there, it's really unclear. It just works, and it works year in and year out. So it's all about the timing. It's all about the timing. If I would have gotten a little bit earlier, it went sideways. If you missed it, then you went in right here. Again, still a nice move. So again, this to me is the most valuable you're going to see is when you can find opportunities out there quickly that give you the highest probabilities of making money. Now I'm going to show you something pretty cool here in just a second. Okay, so how do I do it? I got defined rules, and again, I'm going to keep this presentation fairly short, but I can always have a follow-up and go in much more detail. What I really wanted, the goal of today was just kind of show you some powerful tools because there's all kinds of different experiences here. What I use my custom season indicator weekly charts that Jeff has shown you. I've got the custom script that locates these setups very quickly with the expected moves, which I'm going to show again in more detail. And then the actual triggers, though, what I use as an actual trigger is either the Laguerre, let me change the color on that, is either the Laguerre RSI or a specialized stochastic that I use, okay? And then behind the scenes, I've also got some, from a data mining perspective, I got some of my favorite odds that, what I like about the data mining is it'll give you data based on since the stock has been in business. Right? So again, if you have a stock that's been around over 50 years and it's 90% profitable during a certain window, I mean, that's incredible, right, to have that information. So, but the other thing that my indicator is going to show is what I call a seasonal pattern mirror. And this is where I think, about 5 years ago, I really figured this out, that seasonal data, having that is very powerful. But what's just as important is it going to work out this year, right? And if you know the history of a stock and you can see the movement of what it should be doing or should have been doing versus what it's actually doing, okay, when you know that, that's how you know, and you can really scale in a position based off of that. Again, this will all make sense when I show you in a live chart in just a couple minutes. Everything I like to trade has an over an 80% probability before I get in because, again, trading's tough, right? And I want to give myself the best edge. And those of you, I don't know if there's many in here, but if any of you do day trade, okay, if you know these windows, for example, on that bond trade I was telling you about for August, think if you were a day trader and you were just day trading long plays on that, okay, you would have probably had a pretty good month. So, you know, shorter term traders use this information as well to try to get the an edge as well. Which direction should I go into? Okay. So the seasonal script that I'm using, that I'm going to show you as well in live charts here in a minute, uses 12 years of seasonal data because I found that to be kind of the sweet spot for longer. You know, if you're looking at a stock like Apple and you want to see the predicted move from my seasonal indicator, I have found 12 years to be a really good sweet spot. Okay. And basically what I'm showing is it's going to scan for something that's got an 8% move in the stock on either 20, 40, or 60 trading days coming out, right? So again, think of the power of that. This particular script took me over 3 years to perfect and get completed because it was complex. And I'm not a programmer. I have programmers helping me, but communicating it and getting it done with Thinkorswim was very tough. At one point, I think it wasn't going to be able to be done. But you can then create watch lists and so forth and only look at things that are going to give you the best opportunity to make money with the biggest moves coming. So here's an example on a screenshot that you had kind of seen. But for now, forget the trigger. Well, let me change color on that. So for now, forget this. What the SIG is, it means significance, meaning there's an 8% move coming in either 20 trading days, 40 trading days, or 60 trading days, or all three, but at least one of them have to meet that criteria. So for the minus in the red, it's a short play, okay? It's a short play, and this is just a screenshot of I think, a couple months back. But I just want to explain what this is. The 1.0s mean there's going to be an 8% move coming from 12 years of historical seasonal moves from my seasonal indicator. And like if you were looking at glue back whenever this was taken, okay, look at that, 14, 15% move over the next 60 trading days back when I took this snapshot, okay? So if I got a signal short off my daily, I would ignore it. I wouldn't take the short, I'd wait for the long play, okay? But this is how powerful of data that is now at your fingertips with this indicator. So how can you do a trade like this? If you know the next 20, 40, or 60 trading days, right, there's many ways of placing trades. And I won't go into a lot of details, but just those of you that are interested, just give you some ideas, right? You can do at-the-money calls or puts, 30 days maybe past that optimal move. You know, if it's 20 trading days, maybe, which is 1 month, right? Maybe you go and do an extra month for time decay and so forth. There's a lot of different strategies. You may look at doing debit spreads, one of my favorites, that you go 30 days out right about at the money. You can get a nice 50, 60, 70% profit and get out of the trade. Okay? Or then you can also go at smaller time frames once you get the daily trigger and look to go in when you get a trigger off of a smaller time frame. But either way, right, you're looking at just high probability trades that can save a lot of time looking through hundreds and hundreds of stocks. So my favorite way is to really, in fact, let me just show you on live chart. Okay, so I'm going to bring up, unhide that. And again, I still don't have my seasonal showing here on purpose. But basically, again, I'm going to expand for now. I'm going to expand this out just so that you can see it nice and clear. So again, these are my actual daily triggers. Just ignore these for now. What's important is the significant ones, the SIG. So I'm sorting and this is all the weekly expirations that you can grab in Thinkorswim, okay? You can change that to any watch list you want, and I'll give you an example in a minute. But this is showing you, and this is live, you know, from today. These are all stocks that if I was going to short the market, okay, these are the stocks that I would be looking for and focusing on. Because, for example, ANF, over the last 12 years, from my seasonal indicator, the seasonal perspective, over to the next 40 trading days has gone down almost 14%, okay? So if I'm bullish, big picture, I may ignore it, or maybe I'll have a combination. But this just real quickly will show you when you run the scan, what are the best opportunities out there. Or if you're bullish, okay? These are all the stocks that have weekly expirations, as this is just today's scan, okay, that have some big moves coming, at least 8% move, right? Again, ACAD, look at that, 23% move coming, 25%, 46%. So again, I'm not just going in when I see these, I'm then waiting for the actual trigger. So if I get a short trigger with a long play, I'm ignoring these. I'm waiting for the long trigger before I go in, okay? As an example, let's say you want to check your public and you want to go into S&P 100, just as an example. I'll just show you how this loads in, okay? So I now have the S&P 100 in here, okay? And what this is showing you is for the S&P 100 stocks, there's two that are showing up today. The AGN roughly has a 9% move coming over the next 60 trading days, okay? What the NAN means is there's nothing significant meeting the 8% other than these two. It doesn't mean you can't take a trade. You may say, well, let me take a look at, I'm going to scan the 20-day out. I'm a shorter term trader. Well, SLB typically has a 4.5% move down, right? You can sort by any column you want here in Thinkorswim. Or if you want to look for some of the bullish ones, I'll just scroll down here and say, you know, Netflix has a 5% move coming and a 7% move coming over the next 60 days, right? It didn't show up as a green SIG because it didn't meet the 8% requirement, okay? But if I bring Thinkorswim up in Netflix, you can see here, we had a nice buy trigger right here, okay, right here. And when you're looking at the forecasted move on this, this shouldn't be surprising, okay? So that's exactly really how I do my trading is I look to see first what's going to give me the advantage, okay? And you can customize your watch list in anything you want. So again, if you want to grab something like, you know, upcoming earnings, let's say. Okay, it's just going to quickly do its calculations here. I can sort by SIG. So for upcoming earnings, ISRG typically has a 9% move over the next 60 days. Okay, what that tells you is, this is earnings right here. More than likely, they're a company that when earnings comes out, okay, is usually favorable for them. For those of you that like option plays with favorable earnings, that's just something how real fast you can check this out. Okay, and again, it had a trigger right here. And it's made its nice move up a little pre-earnings there, okay? Okay, so that's what I call, this is the 20/40/60 scanner. Absolutely incredible stuff. I am not a marketing person, but it is absolutely incredible because what it's doing is it's giving you, at a glance, something, you know, very quickly. So let's say you want to trade CMG, I think was brought up. You can type it in and you can create your custom, right? You can actually just type it in here. See on the bottom? I typed it in right here, okay? It'll tell you, again, there's no 8% move coming, but it then tells you what is the percentage move from the last 12 years of seasonal forecast, okay? So it is saying 60 days out, we typically have up to a 4% move here on CMG, okay? So then what I can do, click on CMG, look at the chart here. And again, we had a nice trigger on CMG right here, okay? And now we know that typically, you know, more than likely, it's going to hit new highs at some point here in the near future, okay? I typically use Bollinger Bands. You can use anything you want in your charts, right? So again, these are just the Bollinger Bands right here. You can use moving averages. I'm all about simple. Bollinger Bands are super simple for me. If I get in at the bottom band, I'll usually exit at the top of the band. You know, things of that nature. Okay. Go back to the slides real quick, and then we'll get into the actual seasonal indicator as well. Okay, so the seasonal indicator, which I'll show live in just a second. Remember when I was talking about how important it is to know what it should be doing from a seasonal perspective, okay? That's what this white line is for. So this is Apple, and this is off the weekly. When I look at the seasonal indicator, I like to see it off the weekly chart, okay? So just going back in time here, okay? People always say, well, you know, does seasonality work when the market's going down? Well, I focus on the short plays then, right, from what you saw. But here's a great example where right here, right in, let's just call it, you know, early January, this is what Apple should have did this year from the last 12 years of seasonality, okay? So it started out that way right here, okay? It hit a high. That's what it should have been doing. And we all know that we had the market crash. But my point is, so now, if you understand that, is it following a seasonal pattern? When I got a trigger probably right here, okay, because it made its move down, and then if we more than likely at some point on the chart got a trigger here, okay, if I'm looking at this saying, historically this goes straight up, this year it has not, it's been going down, okay, I'm usually either going to pass on this trade because it's not following its typical seasonal pattern, or I'm going to reduce my size because I know there's more risk. Okay, so basically what this is giving you is telling you the behind the scenes news without even watching the news, right? Because if a stock's not following what it should be, what we would have loved to see on Apple this year is the actual price to go like this, right? Instead it went like this, like everything else in the market, okay? But then what we can do is, as things get back to normal, we can go back 2 or 3 weeks and say, okay, now it's doing what it should be, so I'm more suspect to taking that trade. Okay, so that's what this indicator gives you, which I haven't seen anywhere else. Okay, so let me bring up Thinkorswim. And what I'm going to do is I'm going to bring up, just expand this back now, and I'm going to reduce this so that we have more room. Okay, so this is just Chipotle, and basically what this is showing you, again, historically that white line, this ends right at the current date. So it should have been heading up from the beginning of the year. Chipotle is one of my favorite stocks to buy at the beginning of the year, okay? And again, if you bring up the chart, I actually made money on it. You bring up where? Right here, because sometimes it's so overextended, I have to get in off the stochastic. So right here, okay, and then I'm out. So even though it ended up coming down, you can still make money on these trades, you know, with good risk management. But now the point is, I actually didn't take this long play because it wasn't following a seasonal pattern. So even though it worked, okay, it wasn't worth the risk for me because I wasn't convinced at the time that we were at a bottom, okay? But again, what this is showing you right here, this red line, this is the actual forecasted off of the weekly, okay? So when you look at any stock that has at least, this is defaulted to 10 years, you can modify it to 5 to 20, whichever you want. You know, let's bring up Facebook, or Apple, I'm sorry, let's bring up Apple. So you can see historically from Apple, from the seasonal indicator here, okay, when is some good time to buy? Right here. This is the biggest time, okay? This is the biggest time. So if you look at is it following its pattern? If you find it's following its pattern, you can look at any stock you want. You're gonna be able to see the forecasted seasonal movement from an indicator standpoint, and this is defaulted to 10 years. But again, it's as quick as any setting. Right here's the 10. You can change that to 5 to 20. You know, whatever you want. And you know, a lot of times if you're looking up something like Disney, you know, you might want to just say, well, what does Disney typically do? Because in all honesty, I want to look at the highest probability times to get in and get out of a trade. So if you were in this trade, I would want to get out right about here where the decline happens, take profits, and then maybe get back in once we hit that bottom that we typically do, right? So again, there's a lot of ways to play that. It's just a matter of, you know, your type of style. So again, kind of scrunching that up to show you. My next buy on Disney, my favorite buy would be right here in July. Okay, middle of July, typically it heads higher till the end of the year. Okay, so you have all that information, and you can go as far out as you want to look at that. Okay, so I like to look at the 20, 40, 60. So again, if we let's bring up BAC. Okay, we know historically, in fact, let me actually go back to the weeklies. I'm going to bring up all weekly expirations. Okay, I love trading options. It's got to think about it. There's a lot of data being loaded with the weeklies. See, it's all loading in here. So now I'm sorting by significance, and you know, here's the longs, here's the short. So let's bring up Baidu, for example. Okay, so Baidu, typically, it's negative, and then 10% coming up on that, right? Let me make that smaller. Okay, so I don't like the fact that normally it's minus 2%, then 10%. Right now, I'm going to hold off. Okay, I'm not interested. I'd rather grab something that's got positive, like ARNA, 18%, 35%, 46% typically over the next 60 days. Okay, and then the seasonal indicator validates that. So again, when we got a trigger here, this was a no-brainer. This was a no-brainer. If you just buy the outright stock, or if you're doing an option play, you may say, I'm going to do an option play and have it expire mid-July, because July is when we typically peak here. Okay? So again, just imagine the power of knowing that within seconds, right? This is exactly how I trade day in and day out. Okay, what I figured I'd do for just a couple minutes as well here, let me find, I gotta find the chat. Okay. If anybody wants me to type in a symbol and look at the seasonal, you let me know.
Applied materials, AMATs there.
Let me type it in, AMAT. And I'm also going to type it in down here so I can get the data to see if there's any significance coming, okay? So AMAT, you know, I'm more bullish than bearish, certainly, and you can see, well, we kind of go sideways. Let me show you how I analyze this. We go sideways typically here until August, then we head higher. You see that? So applied materials at this point, for the highest probability, I'm waiting till around August to look for a buy signal, okay? And then when you look at the data, it suggests it's not significant from an 8% standpoint. It's kind of flat, and then the next 60 days it moves 1.5%. So I would rather be long than short typically, but there's no significant advantage compared to these others, right? So let's just focus on the others. And that's exactly how I use this. If I don't see a significant advantage, okay, then I'm going to wait and grab something that typically has moved over the last 12 years of seasonality. EXAS has moved over 25%. And that's just the stock, right? Think of what you can do in an option play for that.
Is there a way to bring in stocks that have earnings in the next 2 weeks that have weeklies? Or you just want to...
I don't have a custom scan, but I believe here you can go to upcoming earnings. I don't know the actual criteria for that. How many weeks that is, but it's coming up. So ISRG is showing significance with earnings on 4/16, or yeah, 4/16, right? So what this is telling you is, historically, we have a 9% move coming over the next 60 days. And what that tells you is, if you like to play earnings, more than likely, typically, earnings is a good play to go long. You know, I don't usually go into earnings with the play, but yes. So you can just go into the upcoming earnings if you like your earnings plays. And again, you can also sort. I'm going to click on this 20. You can also sort just by the next 20 days of anything and say, okay, So Netflix moves 5.23% over the next 20 days, right? So you can play it just like that, because a 5% move on Netflix, you can still make nice money, you know, especially on an option play there. And then 7% over the next 60 days. So you can manipulate whatever's good for you.
And when you have the NAN, that tells you that there's not enough years or they don't meet the criteria?
No, so what the NAN actually is that it's not significant, meaning none of the next 20, 40, or 60 days has an 8% move coming. Does that make sense?
Yep. And what is the green area on Netflix on the weekly, underneath the weekly prediction?
Yeah. When you see the green, that's just highlighting that typically the moves are explosive. Okay, so I just wanted to visually put it on there that you wouldn't need the green. You can just see the lines here. But typically, when Netflix does what it needs to do going in, they're explosive. Okay, so do I think we're going to hit new highs here over the next couple months on Netflix, even in this current environment? Absolutely, I do. I've got a decent position on Netflix right now, but I took the position right here, knowing that if this was not, if we weren't at a bottom of the markets, okay, I would get out sooner than later and then wait to re-enter. But this is just giving you an edge, knowing that typically Netflix has much higher.
Very good.
Okay, so what I wanted, and again, if there's any questions, let me know. I'm not seeing any in the chat unless I'm missing it. But there's 3 offers that I'm giving you today, and these are very nice discounts because I love what Jeff's doing for you all. The HGS member special 1 is getting and I'll show you this in Thinkorswim so it's not confusing. But it's basically getting the 20/40/60 scan, the Laguerre and Laguerre RSI and stochastic scanner. Okay, so what that is, looking for bear with me, get my drawing tool out again. What this is you're getting this scanner, you're getting these indicators. Okay, so that package comes with 1, 2, and 3. Okay, it doesn't come with the seasonal indicator there. Okay, so that special right there is $9.99. The second offer, and you'll get this in an email, I believe.
Yep.
Okay, is getting everything I just showed you, then also getting the seasonal indicator. Okay, so when I go back to Thinkorswim, that includes this, and then the seasonal indicator. Okay, it's everything here. Everything that I use to trade right there. Okay. And then the last offer, a lot of people, as this is the most popular, where you get mentoring as well and VIP support for me. So basically you'll get 4 hours where we share screen, and typically it's 1 hour sessions. And in all honesty, if we need more time, absolutely, that's what I'm here for. It's the mentoring with me, where I go over this entire system. And what the VIP means is I get updates and special offers and things like that. That's included. So that's the most popular, but again, it all depends on your budget, and your interest. So what I'll do is, the next slide, if you purchase the second or the third package within the next 3 days, I'm not going to time it, 3 or 4 days, right? Then you can have even one of the data mining, which I didn't want to spend a lot of time talking about today. But you can get the stocks, the bulls, or bears, which is normally $1,000. And what it does is it gives you a spreadsheet that I've created, and it gives you the stock. It gives you whether it's a long play or short play. Let me change the color here. And then it gives you the entry and exit. Now, again, I don't actually enter and exit on these specific days per se, but when you're data mining, you have to have specific dates, right? So what this is showing you is Ross Stores, if you went long on January 1st and exited on March 17th, over the last 33 years, 29 of these made you money, okay? So, I mean, it's phenomenal data. I actually create watch lists just of my favorite data mining because these have as many years that the stock's been around. Okay, so this is an 87% win rate. Think about using that with the Laguerre, right, with that indicator. So, if you went into January on ROST, would be my guess we would make some money this year. Let's see. I'm just going to fan this out. So in January, when do we get a trigger? We got one right around, look, again, I'll go in a couple weeks early. We got one in right here. Okay, you could have got in there. Or if not, you could have got in right here. Okay, again, depending on your play, I get out of the top band typically. But again, just showing you year over year, I mean, the data doesn't lie. Having that type of analysis in front of you and having a watch list of that as well, is very, very powerful stuff. So if you purchase the number 2 or number 3 package, you can get the bulls or the bears as part of that. And these are the links. Again, you're going to get it in the email back out to you. What I could do though, probably add that into the chat, right?
Yep. Yeah, you got control. So there was 2 questions. Can you look at the SPY for seasonality? And then the other one's, how does it work in a bear market? Yeah.
Yeah, great questions. Yeah, we'll figure that out in a minute. Do you have the links that you could put in there?
Yeah. I don't know if I can control the chat box. You got control. So I will make sure that the links are in. I'll send an email out to everybody that was participated and was invited, and it's a one-time purchase, and if you update, you share the updates, correct?
Oh, absolutely. Yeah. And that's a great point. It's a one-time purchase. Yeah, there's no annual fees or anything. So let me bring up this. You're wondering about the seasonal side of the SPY. Okay. So again, if you're looking at what it should have been doing, as we all know, because of the market crash, right? It hasn't been following a seasonal pattern. Once we normalize, though, you can see right about here we get another push up, and then right about here. Okay, so if you were looking to go short in July, that little time frame there, that would be the best time to short from a normal perspective, and then then right here. So yeah, you can go as far out as you want on that. And yes, the way it works in a down market, kind of like I explained. Let me bring back open the weeklies because they have the most. Okay, when I deem we're in a downturn, and the best way of doing that is right here. When you get a short trigger on the Laguerre, okay, I'm usually just looking to do short plays until I get a re-trigger. So if you're bearish, you just look for the SIG minus 1.0 trades. Those are your highest probability trade short, okay? And again, seasonality works the best when a stock is functioning normal. So if we have, what just happened now, right, doesn't happen very often. So if you're concerned about big moves and you don't want to take those risks, okay, there's a lot of ways of mitigating those risks, but you just kind of stay out until things kind of normalize and so forth. The good thing is with the VIX, we're getting there. Okay, we're getting there. Is it going to be another bottom coming? Nobody really knows, right? Kind of like what Jeff was saying. What I can tell you is one more tidbit. Right now, put it in yellow. Right now, 80% of retailer traders in the worldwide FX market are short. Okay, they're short the S&P. Because in the Forex markets, if you're not in the United States, you can trade the S&P, right, in the Forex markets as long as you're not in the United States, live here, or if you have another place worldwide, you can. And what that is that's a contrarian indicator. So we've been like this for about 2 weeks now. We see retailer traders continuing to short the S&P. That's why we've had the push up, okay? That's why we've had the push up in the market. If that continues to get even more bearish, then I think we're already at our low. If this starts changing, then I think potentially we'll get to another bottom. But right now, what's happening in the market was predictable based off of the sentiment in the market, the FX markets, which lead everything in the world. So that's kind of where we're at. In fact, what I can probably do is get back to the chat.
But you know what? I just realized I can I have my email up that has it, so I can do it for you.
Okay, great. Yeah, just yeah. But again, the bottom line here is, folks, is what I trade is off of probabilities, and everything I do is based off of seasonality, and it's one way to quickly find stocks that have the good moves coming. And more importantly, if you just have your own watch list you want to create, again, you can pick anything you want here. You can go to public. I'm just trying to grab something that would make sense. Let's say you want to trade just S&P 500 stock. Okay, you can just click on that. It's going to do its numbers, its calculations, and that's what it's giving you. So what the NAN is showing is they're not significant of an 8%. The one that's got the cusp, like kind of goofy looking, okay, these are stocks that haven't been around long enough to give me that seasonal data.
Or you got too many stocks listed.
That's correct, but in this case, that's not it. And again, these are what you want to focus on anyway, right here. These are the ones you want to focus on.
I mean, I actually, one question I always have when I listen to these videos is this, and again, I get nothing. I mean, I kid you not. That was never a discussion with Keith. Is this a good price? I paid $2,500 for the seasonality indicator, and I got the Laguerre with it, but not the watch list indicators or the other. So this is and I bought it with the Christmas special, I believe. So this actually was, when I saw the price, I was a little surprised. It's actually it's a good price, at least based upon your usual prices.
Yeah, and very impressed with Jeff and what his following, and the integrity he has, and what he gives you all is phenomenal. So I wanted to do that for everybody. And if you have questions, you can email support@seasonaltraderpro.com. This is my actual cell phone number. So if you have questions, give me a call. Again, full disclosure there, that that is my personal cell phone. So I won't do that for everybody, but certainly for for Jeff folks here. So again, thanks for listening, and I'll
All right. So somebody just ordered package 2. You'll just send them a link when you get off, right? For the download.
Oh, great question. So so when you purchase, it's actually automatic, where it'll then you'll basically click to a download, and then there's tutorials on how to do it. Okay. If you have questions, or if you're not clear with something, please email us. I don't want you spending 12. It's easy, but things happen. So if you have questions, I won't have a problem at all sharing screen with you, making sure you're all set up. Because again, I'm out here to help everybody with this, not have a bunch of frustrated people. But it's very easy to install. And those of you that know Thinkorswim know what I mean. It's simple to upload indicators.
It is. All right. Well, I think on that note, we've got all the questions answered, and we'll give you all back 10 minutes. But thank you, Dr. Keith, for coming on. And I appreciate everybody being here. And I didn't add it to my Thinkorswim today. I've been using it because I'm a big seasonality guy as well. So you all have a great weekend. I'll have my weekend review up on probably Sunday. And have a good Friday.
Thanks, everyone. Take care.
Thanks. I think you probably have to stop it because you're the host now. Perfect. Thanks.